So obviously it's quite evident on the weekly that price has been on a downtrend since 2008. Okay, so we are not concerned about all of this data. When you go to your weekly time frame, you're not concerned about all this data because it's simple. A candle would form in a week. So it takes 1 week to close a single weekly candle. You can't be analyzing off that data. Okay, so you should be more concerned with your immediate data right here in front of you when you're on your weekly time frame. Okay, so we've had series of lower highs, lower lows, lower highs, lower lows, right? And then this was the last weekly high, and I can call this a breakout structure that led to this low, and then price had come back into the area, right? So we've had this move to this, right? So I'm looking forward to seeing this. Okay, as it regards the trend, okay, the trend is always right until it is violated. Though, like I would always say, the trend is used, the structure of the trend is useless without liquidity. Okay, so not too much story here, just the downtrend informations. And let's move to the daily time frame. Okay, on the daily time frame, we've had the same thing present itself. Okay, so not much story, right? And then we had this drop and back into this area, and I'm still looking forward to seeing this. Okay, I'm looking forward to seeing the same price clear this low. Okay, so let's go to the 4 hours. I think that's where we have juice from. So on the 4 hour time frame, we had this structural level, right? And then we had this to the downside. Dennis, mute your mic. Dennis, mute your mic. So we had this structural level present itself, and then we had price move to this point, right? And then we had this grab on liquidity here. This was our shift in structure. This is our shift in structure, and then price came back in to mitigate breaker blocks, and then some other thing inside of these areas here called a HVI. I will explain that maybe in coming dates, but I don't want to be giving you guys too many grammar. All of those names are almost irrelevant. So let's just deal with the breaker block. So let's say price came in to mitigate this whole thing as a breaker block, right? And continues to the upside. The idea of all of that was to come back into a more premium area where we could now begin to experience sellers. Okay, so from this top here to this low, okay, anywhere above 0.5% on midline is a nice area, right? But the reason why they had to come into this area is because we had our algo structure inside of the area, right? We had this grab on liquidity, and then we had this shift in structure. Okay, the price had never returned to. So price came back to this area to work with this internal structure. Sorry, guys. And then we had this escape to the downside. So what should we be concerned about this week? This week, I'm looking forward to seeing price clearing this low as a weak low. Why is it a weak low? It failed to sponsor a move that should clear this structural high, because this is the structural high that led to this low, right? And it has failed to do that. It has also failed to break above this minor structure. So it means it is still in line with the lower highs, lower low structure, right? So the weekly time frame is bearish, the daily time frame is bearish, the 4 hour time frame is still quite bearish, right? So let's see the 1 hour. So it's not too relevant, but let's see the 1 hour. Let me take this off. All right, so on the 1 hour time frame, we have had these same moves I explained on the 15 minutes, on the 4 hours, right? That's why I said it's not too relevant. The same price story, the same price story. Now, getting to this point, we have shifted through a 4-hour structural leg. This is a 4-hour structural leg, right? And then price came and then broke this structural level that had come into this region and then shifted structure already. So some people would have been expecting to take buys from here last week. And I know people who wanted to enter this block for buys and they got wicked out before the move. So price, this morning I expected price to grab liquidity from this guy, okay, before we begin to see some further move to the upside. So I'll just go back to what I'm expecting on the 15 minutes time frame, and then we'll move to our entry time frame. All right, now this is the high I'm concerned about, right? Because this is the 15-minute structure. We have this to this low, to this here, and then we have this, right?
Yeah.
So it means from this point to this point is its own structural level. From this high to this low, it is its own structural level, right? And then price had come from here to here, had come into 50% of these levels, right? So it is a more premium area that they were willing to sell from, and the market makers or the algo initiated a sell that's now dumped price further to the downside. So this was perfect delivery because it was inside of their premium pricing. Okay, so it now brings us to this new structural leg that is this high to this low, right? This current low where we are sitting, right? And then if you observe, the sales that happened on Friday happened before getting into the 50% price range. Okay, from the new diagram we have here with respect to our FIB, we have not seen discount pricing. Okay, and then I could not call this a high. Let me take this out. I could not call this here a high to a low. I could not do that. Okay, because even if I had called this a high and this a low, it means price would have come into more mid areas, right? Maybe somewhere around here before we had that sale, right? But that did not happen either. So it means at the moment, yeah, I'll take all questions shortly, please. So it means at the moment, price is still delivering off areas that is not comfortable. It is not fair pricing for the market makers. They are not willing to deal at those prices. They are not getting the best of offers at those prices. Am I making sense? Okay, so the idea, like I said, we are always selling in premium and buying in discounts. I'm not looking for sell opportunities in anywhere that is not premium or discount, except I have a price action that presents itself and I'm willing to risk. Now, the reason why we took these sales on Friday, okay, is because we are trading off the Asian range, okay, grab of Asian low and then grab of Asian high, and then price created a structure. And then we had lows, M15 lows we wanted to clear, which was this low, right? So we are willing to deal with that, and we expected price to just grab and then begin to move back into premium areas. Now, if you observe clearly, I will always mention the fact that, so number one is that price has not come back into premium areas to enforce major sales to be able to clear out daily low, right? So we need premium areas we need price to tap into premium areas with this new structural leg before we look to take further move to the downside, right? So that's the first confluence why we'll be looking forward to maybe a buy to sell model. Okay, but then the overall we are still bearish, but M15 is giving us some signs of bullishness. So let's go to our entry time frame. Now, another reason why we should be looking for some sort of bias is because the surroundings, some people would have been willing to sell from this point, right, as a grab on liquidity. I don't know if you can see this internal grab here with this high and then shift in structure. But if I was using this, price already came back to mitigate 50% of this range already. Okay, which is fair pricing for them from here to here. Okay, over 50%. So this is in premium already, and then they began to sell, right? So they did a nice sell-off already based on. I'm hearing noise on my background. I'm hearing noise on my background. They did a nice sell-off already based off this algo candle. Okay, that happened in the NFP on Friday. So they just came back to fill this and then continue with the dump. Okay, so they had left these equal highs inside of these areas that could be cleared. Apart from that, we just had mitigations, creating a fine trend line on this area, right? And then for, like you guys call it, your trend line liquidity. Even if the target is not a trend line, the target is the origin, okay? But I'm drawing all of this for the purpose of explanation, so you understand the story price is trying to create. Okay, so better on the 1 minute time frame. Okay, so it's more clear on the 1 minute time frame. Price tapped into, let's go back to that area. Okay, so on Friday, we had this entry here as the last point of buy before the drop. So they came back to mitigate these areas, close in their buy positions. They had dropped off aggressively, so they had come to close. All of this is a single block on the higher time frame, right? So they had come to close in the positions they had opened here on this buy move to try to manipulate. I had one more entry here. Okay, I was going to take one more entry here based on this grab and this shift. Okay, so I was already in here for extra sell positions on Friday before this happened to clear that and then continue with the rest of the sell positions that were open. Okay, so price just came in here to tap on this, and then we had this shift in market structure, okay, which made these highs, new highs, we could be looking to play from, and then they delivered just fine. So this would have been the IDM, internal IDM levels, and then price tapped in, and then we continued break of structure, new highs. Okay, new highs to have played from if we are willing to take these sales. Okay, I watched all of these play out, but then it was not interesting for me because I had other things to take care of, and then you cannot be wanting to take every move that happens on price. You're not a robot. Okay, so that continued to clear out this low with Asia and all of that. Like I said, proper mitigations, transfer of funds. None of these highs were swept. Okay, none of these highs were swept. All the highs were protected. All the highs were protected. All the highs were protected. All the highs. It means we have old orders. Okay, I still have my sell orders from this area. My sell position from here is still open till now. Okay, so price will seek to clear all of those orders with this Monday open. Okay, price will seek to clear all of those orders with this Monday open. So rinse all of those orders that were created in Asia, and after Asia, grab all of those, take out these equal highs. That is what I expect as EOF. Okay, EOF is simply expectational order flow. It is not what price must do. It is what I expect price to do. Okay, so inside this area, we have some sort of flip zone. Okay, that price had come to respect based on candlestick structure. So with respect to candlestick structure, price had respected the flip zone already, but with market structure, we have not seen price come back to the zone. Okay, because this was the low, right? This was the low. If I trace this low through, you'll see that the structural pullback did not get back to the low, right? This is the last point. You can see that, right? This last point did not get back to the low. So we cannot even call this support broken zones resistance. Okay, so we need price to revisit this area and then work with the internal structure that we have. So this is a shift in market structure. After we had this grab on liquidity, price shifted structure with this low and then came back to respect this. Okay, so this is a nice mitigation already. Okay, which now enforced a new shift of structure and has left this open after I would look at this as a grab on liquidity. Okay, so I've had this grab on liquidity. I'm hearing some noise on my background. Oh. Ose. Let me not hear your noise again, please. All right, so I will consider this a grab on liquidity and a shift of structure. We have this fair value gap. The price has just come here and are not giving us proper mitigation into this area. Okay, so I expect this to be the new flip zone because of some story I would have considered from this end as a grab and want to view this as a shift. Okay, and then I'll consider this as my HVI that sponsored this move to the upside and was raised. Okay, so this is the last point that violated this area. So price should come to mitigate this algo candle properly. Then we can look for more plays to the downside. So price had already come to respect this as a, what's it called? As a breaker block. As a breaker block, right?
Yes, sir.
So sorry, give me a minute. Hey, I'm teaching, please. I'll call you back there. Okay, so price had already come to mitigate this as a breaker block, right? But then it is still candlestick structure. I expect the area, this whole zone, to be mitigated properly. Okay, I expect this area to be mitigated properly. And then I talked about how breaker blocks become liquidity. If you watched class 15, I think in class 15 or in class 14, I took out time to explain how breaker blocks, once price has touched a breaker block once, if it comes back to the area, do not seek to trade off the price action that rested on the breaker block. Okay, in most cases, it will most likely liquidate the breaker block and tap into more comfortable or fair area or fair pricing before we see further move to the downside. Okay, so I'm expecting price to come into this region, and then I want to see some sort of confirmations before I am willing to work with what is present in the area. Okay. Any question as regard that? Now, yeah, this is the area I was looking to buy from this morning, and then I'm already in this buy or from this area. I said I will not be trading, but this was just too good. Okay, this is the exact point I expect price to react from. I just drew all of this for the sake of, what's it called? What's the right word? So it doesn't look like we are robots, okay? Because this is the HVI that sponsored the whole move. And so let's just see what we can get out of this. I want to see a clear shift of this structure totally. So I'm setting that we have higher pricing. I'm setting that we have higher prices, and then we should look out for higher prices this week. Then we can make progress. Okay, any question on Euro USD?
No questions.
No question. Okay, any question generally? Yeah.
You talked about variance of demand and supply. You said you teach us in supplement videos.
Variance of demand and supply. Have I not taught that already?
I don't think so.
Which of the classes did I mention I was going to teach that? I think I have taught that already. But I'll check. I'll check through that. I'll check through that. Okay, so any other thing? Any question?
I think you also said you
I can't hear you. I said I was going to teach on what?
the other types of entry models. Mention you do that.
Okay, we'll do all of that this week. So we'll talk about demand and supply variance, and then we'll talk about the entry model variance this week. What else are we supposed to talk about? So just have them in mind. Any other thing?
Those are
Right.
the two I can.
Okay, so for those of us who just got on the group, I trade basically Euro USD because less is more. Okay, less is really more. If you understand what you are doing, you don't need too many pairs. Okay, you don't need too many pairs. Now, the reason why I like to trade just one pair is because apart from the fact that it gives me a certain level of clarity, I'm hearing one sound, like one, I don't know who that is. But I think it's from your network or wait. Dennis, it was your network. It was your network. Okay. So apart from the fact that it is important to know what is happening within the pairs that you trade and to actually keep in touch with the pairs. Trading is like getting a pair is like getting a wife. Trading a particular pair is like getting a wife. Okay, for those people who I taught retail price action, who have been with me from the beginning, they understand what I'm talking about when I say trading a particular pair is like getting a wife. Okay. When you trade a particular pair, every pair has its distinctive behavior. Okay, every pair has is, I don't know where this volume is coming from, but then it is what it is. Every pair has its distinctive behavior, right? Not all pairs behave alike. The setups I will comfortably take on Euro USD, I will not look to take them on GBP JPY. Okay, a friend of mine, who I was trying to enlighten as it regards trading algo structures and all of those things. Okay, would always send me a complaint about him trying to take these setups on some other pairs, and then he's always hitting his SL, or price will always take him out before he finally moves and all of that. But he was doing the right thing, okay? But somehow he needs to study the behavior of the particular pair he is willing to trade with. Okay, he needs to study the behavior, the price action of the pair he wants to trade. So don't just wake up and try every pair, or don't just wake up and want to trade every pair. Every pair has its distinct behavior. I am used to the behavior of Euro USD. Okay, I will always talk about price action as the behavior of price. That is what I see price action as simple as that. Okay, I define price action as the behavior of price. I do not behave. Oh God. I do not behave like Austin. Austin does not behave like Dennis. Dennis will not behave like Mr. Kenny. Mr. Kenny does not behave like Israel. Yes, all of us are humans. All of us are men. Okay, the same thing is applicable to trading a pair. EU will not behave like GU. GU will not behave like EJ. EJ will not behave like GJ. Okay, so when I stick to a particular pair, it's because I have followed through with the behavior of that particular pair, and I am comfortable with the behavior of the pair. Okay, I have followed through with the behavior of that particular pair, and I am comfortable with the behavior of the pair. I have learned the behavior of the pair. I have seen the habit of the pair, what the pair should do and should not do. And then it helps me keep tab on what is happening. Let's say I had eyes last week. Let's say last week I was trading GJ and trading EJ and trading UJ and trading this one and trading that one and trading. How would I be able to know that EU did not react off a more discounted price? Hence, I expect all of this to happen. If you take away my laptop from me, I don't have my laptop with me, and you call me to ask me about what is happening on EU, I should be able to give you detailed information on what I expect to happen from EU this week without looking at my laptop, because I have it at the back of my palm. I've watched it play out from Monday, Tuesday, Wednesday. In fact, I've watched it for how many months now? And then with respect to the setups that I trade, EU gives me a more cleaner entry to the setups that I trade. Okay, so it's a more comfortable asset for me to trade than any other thing I would have loved to trade. Okay, so the reason why people want to trade too many pairs is so that they can get more opportunities. True or false?
True.
Okay, the reason why people trade too many pairs is because they feel that they will not be able to get opportunities from a single pair. Okay, you should be looking forward to making, for starters, okay, this is what you should do. Look forward to making 20 arrow in a week. That's all you should be concerned about in a week. 20 arrow. 20 arrow may sound too small, but as you begin to make progress and you begin to grow in your account size, you understand that 20 arrow is obviously enough. If you're risking 1%, it is 20% of your account size. If you're risking 0.5%, it is 10% of your account size in a week. Okay, so 20 arrow is obviously enough. So if you're actually looking for that, you will not be concerned about looking for so many pairs. Why? Because I know certainly that if this move will buy, I should be in the buy. If it will sell, I will be in the sell. So if this zone gets taken out, I'll see this as manipulation and wait for a more comfortable entry. I will come in, I will ride the buys to the up. I will also ride the sells down. I'll take the smaller sells inside of the regions and all of those things. So why should I be looking out for more bets when I can easily go with the story that is present here? And then I continue with all of that back to this point, and then I buy it back. So there is no need for all of that. Now, if it is your style of trading to look out for too many pairs, it is amazing, but less is more. Believe me when I say less is more. Okay, pick out 2, 3, 4 pairs max, 4 pairs max that you are certain you can relate with, and then go through it. If not, pick out one pair. The amazing traders who we call goats, okay, and then we look up to in the industry, they have 1 pair or 2 pairs they trade. So they always brand themselves as either the goat of NAS 100 or the goat of US 30 or the goat of GBP USD or the goat. But you now, you want to come and be the goat of the markets. You want to trade US 30, you want to trade EU, you want to trade GBP USD, you want to trade GG, you want to, if I see any of you in my DM asking me, boss, please, can you help me check what's happening on GG? I will block you. I don't check what is happening anywhere apart from Euro USD. That's where I live. Okay, we can do gold on the side and do GU because they are positively correlated to Euro USD. Okay, but then my trading plan does not allow me flats. Okay, I can only flat with pairs that are positively correlated. Let me open my, look at what I have here. Okay, I have DXY, I have Euro USD, I have GBP USD, and I have gold. That's because they are positively correlated. I will never add any other one to this. Okay, so pick pairs that are comfortable for you or fits your style of trading, and then work to understanding their behavior, and then approach them with or based on their distinct behavior. Okay, I hope that makes sense.
Yes, sir.
All right. Just have 6 minutes more. Any question? I don't know who is this user that has his name as iPhone. Your network is really stressing me, and you keep turning your mic open. All right, any question? All your networks are bad. Israel, your network is also making noise. I don't know whether it's because of the car you are in or something, but it's fine. So I think in absence of any other question, we'll have to call it a morning. And then let's just look for this to play out. So we are looking for a more comfortable area for a buy to sell. If this does not hold, okay, if this does not hold, 15 minutes time frame. Okay, what is on the 15 minutes time frame that you want to show me? Why didn't you take that as a BUS on the 15 minutes time frame? Where? This point? Is this what you were referring to? Please, you can, where the trend line started from. Why didn't you take it as a BUS on the 15 minutes time frame? Do you mean this or this? Which of them? Yeah?
Where that trend line starts from?
This one? From the beginning?
Yes.
This one?
Yeah.
Why did I take it
Yes,
as
sir.
a break of structure?
Yeah.
It's actually a break of structure now. This is the origin. This is the break. Price came back into feeling this and then continued to dump.
I thought you said you are waiting for that position at the top.
This one at the top. Like if I will not take this to sell from here.
Yes, sir.
Why? There's no need to sell from here. Why should I sell from here? This is the origin. Break of structure, tap here. Okay. All of these things happen here. If there is no liquidity, price will simply engineer liquidity. Okay, so all of these here are engineered liquidity. Okay, liquidity have been swept from this low. Liquidity have been swept from this low, right? Liquidity have still been swept from one other angle I have at the left. Okay, so we have liquidity sweep from all of the, I explained this in the last zone we had with the diagram. Okay, liquidity has been swept here, but we have engineered liquidity here. These highs are free. This high is free. This high is free. This high is free. This high is free. And it's impossible that we have orders resting in this high that belongs to the market makers. It's impossible. They have taken out all the orders here. The only orders we have resting here are retail orders. Okay, so they will come back up to clear all of these before, because they need all of these for fuel. Okay, they need all of this for fuel. So expect them to come back to this area and then clear all of this before we make further moves to the downside. Okay. Yeah. So if I was to look at this as my next point to trade from, I would not be able to take this in the first place because I don't have a proper grab on liquidity. There's no liquidity. The trade happened here, happened internally already. The setup here was an internal setup. Okay, the setup that happened here was a much more internal setup. Where is it? And I explained it just now. Okay, we had this first tap into the area, shifted structure, price came in, mitigated and dropped. New break of structure, price came, mitigated and dropped. New break of structure, follow through entry model, price mitigated and dropped. So we had the chance to enter at this point as entry 1, entry 2, entry 3, and entry 4. Okay, so we had 4 entries. If I was supposed to take this trade, I would have 4 positions open in this area, and then before the whole sell-off started. Okay. And then we had this here to be a flip zone, grab liquidity shift, price came into the region but failed. Okay. And then we'll be concerned about this guy here and the extreme because of this grab on liquidity. Why this guy? Because this is the guy that is not seen. I will always mention, okay, the area not seeing the inefficiency. Okay, the last week before the inefficiency. And that was the next sell-off that happened. Okay, so there were multiple positions why you should have taken a sell inside of those videos, but not at this stop anymore, because all of this will be cleared. All of this will be cleared. Any other question? Any question?
Yeah, about the sale that happened this morning.
Yeah.
Frankfurt Open. How would you have leveraged?
That was not even Frankfurt Open for me. Okay, this was not Frankfurt mitigation. Frankfurt mitigation for me is at 7 a.m. I'd consider my Frankfurt Open at 7 a.m., not 6 a.m. Okay, but then for some reason, there are people who mark Frankfurt from even 5 a.m. But from my experience, I like to take Frankfurt from 7. But then let's see how we would have leveraged off that. Okay, but I think I just have 1 minute more for this. So I'll just run through that. So this was the Asian high. Let's see where it took liquidity from. Okay, can we actually trace that now? Okay, good. So this was the high. I have 1 minute for this, and the session will be over. Okay, grab liquidity, right? And we had this shift in structure. Okay, so we are looking for some sort of flip zones we could trade from, because this was also a grab on liquidity here and a break of this structural high. So it means price would have expected to buy from here. That is where we have this reaction, right? So this was the last point of demand that failed and transferred power to the last point of supply. It's quite simple.
Yeah.
Okay, and we have this job. Okay, so that was that for Frankfurt. Okay. So everybody good? The video will be going off in less than a minute. My time is exhausted. I'll see you guys within the week. All right then. You guys trade safe today. Don't forget it's bank holiday. All right, bye. All right.